You never know how much time you have. For me, that stopped being an idea and became reality on August 22nd, 2021. The doctors put me on a ventilator and told my wife to call hospice so she could prepare for the day they planned to pull the plug. 6 weeks later, I woke up to an entirely different reality. I could not walk, I could not talk, I could not even lift my own arm. And I woke up realizing something else. I had not made the right preparations for my family. The plans I thought were pretty good fell through when it mattered most. That is why Fiduciary Alchemy welcomes voices that would have warned me about the holes in my plans. My hope is that you live a long and prosperous life, but I also hope you make better plans than I did. So tune in, take notes, and stay with us through the end when Bluesman Grindle and the Compliance Choir bring a word of caution.
Today I want to welcome Peter Culver. He is the co-founder of Wealthrive. Peter's a lawyer, and a lawyer that you want in your corner. He's helped clients save tens of millions of dollars in taxes. His passion lies in helping entrepreneurs and their families thrive both financially and personally. He has over 40 years of experience and has uncovered what keeps the rich rich, and he applies these insights to empower his clients with actionable strategies that yield measurable results. Not only that, Peter's managed portfolios exceeding $2 billion in investments. And actually, the more I think about it, I would imagine more than that. I just kind of pulled that out of your bio. Peter, welcome back.
That's the inception value. I probably should have calculated, the end of it value, but at a portion in my part of my career, I was very involved in the asset management world. Personally, I think that world has become somewhat of a commodity, or a lot of it has become somewhat of a commodity. Some more exotic strategies, not so, but in my own life and with my partner, we've pivoted really to focus more on helping people reduce their taxes, because we think that adds more value than, a couple hundred basis points or something like that in their investment. So, but,
Well, and that's a really interesting perspective, and especially when you talk about commoditized. I mean, it's something I talk about when I talk about wealth management, financial advisors. It's a type of field that we love as marketers. We love the highly commoditized fields because it's so hard to differentiate.
Correct. And so my partner is a CPA, and I would say he and I have been working together for about 20 years. And I would say for the first 10 or so of those years, the core was investment management, and we dabbled in, just basic stuff, tax loss harvesting or estate taxes, things like that. But we started to hear a lot from our clients and other advisors that we work with, the sort of constant complaint that they didn't feel like their advisors were bringing them proactively interesting tax ideas. So we heard that enough, and we thought, that's different from what we do. We should stick our nose into that. And so, that's probably 8 years ago that we started down that road. It used to be just part of our wealth management business. The reason Wealthrive exists is really that's a separate business legally related to our other businesses, but it focuses almost exclusively on the tax savings. And so, I don't know, it's more interesting to us. It's more energizing to us. We think we deliver a better ROI to our clients. So we're just having entrepreneurs don't like to stand in the same place a long time, right? So.
Well, and this is one of the reasons I love podcasting. I have the same frustration. I'm the one that tells my CPA about tax cuts.
Right.
And I get to talk to people like you who have all these insights, things I hadn't even thought of.
Right.
And that's one of the things I love about podcasting. It's just opportunity to do that.
Well, one of the great skills usually of a good entrepreneur is they're lifelong learners, right? So whether you can learn by doing, you can learn by listening, but we tend to be knowledge sponges, right?
Yeah. Yeah.
So
And it's interesting. There's always something to learn. And the world is dynamic. We'll get into this in a few minutes about how, AI is really shaking things up.
100%. Yeah, we're trying to climb that mountain too, probably. That's it.
But the frustration that you talked about, it's been frustration from, I mean, I'll go back to my CPA.
Yeah.
I approached him and said, "Hey, I heard about this thing called the Augusta Rule."
Right.
He's like, "Oh yeah, yeah." And I was like, "Well, I want to use it." And we kind of hammered out something for me to use
Good.
it. It's like,
Good.
why didn't he bring it to me?
Agreed.
And then I hear about,
And
hey,
just between that's a baby step in the great world of tax strategy. So it's revealing that you found out about that we hear that over and over again. That's tragic, really.
it is. And another one I heard about recently was the importance of setting up a home office.
Yeah.
So now if I'm driving, I have an office in Austin. If I'm driving,
there's an even better one than having a home office, which I'll tell you about if you want me to. But there's
let's go.
Okay. So basically, what happens with home office, oversimplify a little bit. Let's just say you have a 3,000 square foot home, and your home office is 300 square feet, 10% of it, and the CPA does some math. So you allocate, your electricity, whatever it is, to that space. And that is a good number. Here's an interesting off take of that, which is the way the Augusta Rule works is if you have a business, which could be single member LLC, S Corp, whatever it is. And if in that business you have a practice of holding meetings, your company can rent your home from you for the meetings, right? So now if you think about that, that rent is deductible by the company because it's a business expense. You could have the meeting in a hotel in Austin or wherever it would be. So the beauty of the Augusta Rule is that the rent that the company pays to you to use your residence for a meeting, 14 days of that income a year is totally non-taxable to the homeowner.
Right.
And the way that works is you have to get a valuation, which we arrange for clients if they want us to do it. Well, what would it cost? If I went to a hotel in Austin, what would it cost to have the meeting there versus having it in my house? And it turns out that when you do the math, the average can be something like $2,000 a day. Rent the room, get the audio visual guy, bring the food in, whatever. So 14 days times $2,000 a day, that's $28,000 of tax-free income. This is not monumental, but it's a sort of freebie there, ready to be taken by you. I can tell you, at least when you mentioned it to your CPA, he'd heard of it. We've had cases where clients had CPAs that hadn't even heard of the rule. The rule is in the Internal Revenue Code. This is not edgy, creative stuff. This is like basic blocking and tackling. So, and I think it's just, and this is not a criticism, but the temperament, the mindset, the comfort level of the typical CPA. One person I was talking with a week or so says they only want to paint between the lines, right? They don't want to get outside the lines. That's not often a good fit because most entrepreneurs have a lot of the success that they have because they paint outside the lines. And look, we're not doing anything. No one's going to jail for stuff we're doing. No one's paying huge penalties, but the bigger opportunities are in the gray zone that's outside the lines, not what's inside the lines. But it's still shocking that you don't even hear from your CPA about, I don't mean you personally, tons of people, that you don't hear about the stuff that is right in the middle of the fairway.
Well, and when you explained it, you added a dimension that never entered my conversation with CPA. So the approach I was taking was I was finding comps. I was looking at VRBOs
Right.
and was like, what would an equivalent house rent for?
Right.
Not, which is different than what you said. You said, what would it cost for me to rent a conference room at a hotel?
Right.
Well,
And
that's a
there's a
lot.
little bit of a market out there of people who, so you want to have a justification if you're going to take advantage of this rule of the amount that the company paid you and you did not report as income. So there's a little cottage industry out there of people who specialize in doing those valuations. And the guy we use, I think he's in Texas somewhere. I have to look that up. But so that's just a very simple, straight. There's a lot of these strategies it's all record keeping, right? So if you're going to take advantage of this strategy, you want to have an agenda for the meeting. You want to have minutes of the meeting, which you can just do by turning your computer on, right? Just
Right.
turn Fireflies on or whatever one it is that you use. So we just love telling people about things that they've never heard about that are advantageous to them.
What are some, so that one's kind of mainstream. What's one that's a little bit more in the gray area?
All right. I'm going to give you one more mainstream one that a lot of people don't know about. Then we'll do a couple more interesting ones. So there's another thing which we call pay the kids, PTK. So a business, your business, could hire your kids to work in your business. Now, they have to do real work. They can't just, you can't just slap them on the payroll. But if they do real work, and the work has to be age appropriate, so we're not going to defend the fact that our 3-year-old was doing AI coding for us. Now, maybe these days a 6-year-old could do it. I don't know, but not a 3-year-old. So there, if the business pays a kid for legitimate work, that's deductible by the company because they could have hired not your kid, but somebody else's kid. And again, it has to be age appropriate. Now, some things would be obvious, but some people get really creative. So we have a client who designs custom, very fancy wedding dresses for people for weddings. And often that also includes the bridesmaid or whatever. So what this lady did was she's got a whole bunch of marketing materials, brochures, online things, videos, and stuff like that. And in some of the videos, there's both a lady with her wedding gown on and the little bridesmaid in a kind of matching dress, right? In her videos, the bridesmaid is her daughter, who's like 4 years old. And what a very enterprising person created was they pay the child a royalty to license the use of the child's image in the business. And it's age appropriate work. She puts on the dress, she stands there, she smiles, but it's definitely valuable work. So that's PTK, pay the kids. So that money, which is about $17,000, $18,000 per kid per year, again, deductible by the company because they're just paying your kid rather than somebody else's kid. But that money's not taxable to the parent or to the kids. A little exception to the normal rule. And what a lot of people do is they take that money and put it in a Roth IRA. Mm-hmm. So, you do that 3, 4, 5, 6 years in a row, and you invest the money wisely. That can, maybe it turns into $100,000 or $150,000 that could be used for college or whatever. So that's another somewhat more basic one.
So are there some restrictions? So I'm at the point of grandkids, so we don't have any in the house. Can I pay the kid and pay the grandkid?
I think you can. Let me double check on that. Let's just think. The grandkid. Let me double check. I will do that for you.
Yeah. Because it's just fascinating. And
yeah.
And you said it was a cap of, what did you say, about 17, 18,000?
I think it's 17,500 or 18,000 right now. It generally equates to the standard deduction. In other words, they're basically letting you use that amount in addition to whatever else you're using the standard deduction for. But that's another one. It's right in the Internal Revenue Code. This is not in the gray zone at all. It's in the, I like to call it, there are 3 zones. There's the red zone. That's all the stuff that you should not do. That's a small part of the Internal Revenue Code. And what we say is then there's the green zone, which is the stuff that's right in the code. That's not the majority of the code. The majority of it is kind of the whole gray area where if you're thoughtful and creative and not too adventurous, you can come up with new stuff to make a much more significant impact on your taxes.
Well, let's talk about that. What are some gray zone examples?
So I'll give you a couple. So a strategy that we use a lot with clients is to have clients invest in solar panels. Now, this is not putting solar panels on the roof of your house. This is investing in a large scale, like maybe those movie studios, who knows? They might dedicate 10 acres of that to solar panels to generate energy for a movie studio. I don't know how movie studios work, but lots of educational facilities have those farms. They're very common now. You know, those storage unit complexes, right? Someone buys a piece of land, grade it flat, put a whole bunch of storage units on it. These days, most of the roofs of those individual storage units are solar panels.
Mm-hmm.
So the way that works is, first of all, this is a very safe strategy too, because as opposed to paying the kids and what we call dwelling unit rental, which come out of the Internal Revenue Code, the solar comes out of federal legislation. So it's been authorized. There's nothing particularly creative about it. There are 2 tax benefits. One is the way we implement that is we have a client set up a little LLC. So the Andrews Family LLC solar business, whatever. And as long as over the course of a year, you spend 100 hours of time, quote unquote, managing your solar business, all of which you can do from the comfort of your chair and your computer, because we just feed you the activities. That's considered an active business. So the solar panels, which you buy for your active business, are equipment that can be depreciated. Just like if you had a real estate business and because of some changes made in the One Big Beautiful Bill, the very new recent tax legislation, all of the cost of the solar panel can be taken as depreciation in the very first year. So you expense pretty much the whole cost of the whole thing. That's called 100% bonus depreciation, now also applicable to real estate. So that's one benefit. So you get, if you can think about sort of the tax return, you have all your income items, wages, distributions, investment income, that's your income. Then you have deductions, the standard deduction, but one of them is depreciation. So that brings your income down so that the number that you pay taxes on is lower. So that's a good benefit. The real benefit of solar is it generates tax credits. And tax credits go dollar for dollar against tax. So they reduce tax as opposed to deductions, which reduce income. And what's really powerful there is the way the solar legislation works is you can acquire, there's generally a limit of how much credit you can apply in a single year. It's about 75% of your income. You can only use credits to wipe out about 75% of your income. The solar program lets you buy more credits than you can use in the current year. Well, what do I do with those extra credits? The law says you can carry them backwards up to 3 years to file an amended tax return and get refunds of taxes from prior years. So a lot of clients that we meet for the first time, what's on their mind is, oh, I'm going to make a whole lot of money in 2026. And what do I do to avoid paying a lot of tax? if in their case, one of the things they can do is this solar investment, it's not only going to have a benefit for 26, it may enable them to go back to 25, 24, 23, 3 years backwards and get some refunds of prior taxes. So it's a fun feeling to get a check from the IRS rather than writing one to the IRS. So we do a lot of that. So that's a more intricate, not crazy. Again, that one's just completely authorized by legislation. So it's not edgy or risky in any way. That's a good one.
Yeah. That's wild. Well, and let's touch on why it's important. So all of us only have so much time in the day.
Understood.
And why should I take my time away from earning money to focus a little bit of that time on saving taxes?
So, excuse me, it's really just a math problem. So we all know about, if I put $1 in the bank and I buy a CD and it earns 4% and I just keep doing that, that interest rate compounds and I have more money. Now, we would never recommend that somebody put money in a CD at 4%, but if I put it in my investment account, let's say it earns 10%. So there, the famous rule of 7 would operate, right? If I earn 10% for 7 years in a row, I double my money. So if you just think about that in the context of taxes, let's say if I do nothing, I pay 40% in taxes. I do some of these neat strategies that I've just described, and I pay 20% in taxes. That's money that I can put to work somewhere else, in my business, in an investment portfolio, in a piece of real estate, which is then going to compound, at that rate. So I love when I do a formal presentation about taxes, the cover page says, the second best way to get rich in America. The first one is start a business, grow it to significance, generate a ton of income, sell it, whatever you want to do with it. The second one is paying less in taxes, because that's more money you can put into the first one. And we have a slide that kind of shows how the compounding works. So it's just the math of it is tremendously powerful. And I think it's particularly powerful with entrepreneurs, because I use silly examples like compounding at 4%, compounding at 10%. Right. If you have a really successful business, I mean, that compounding might be 20%, 30%, whatever the nature of your business is. And, that's not a political thing, but I think either from a control standpoint, most entrepreneurs think, I can probably I'd rather try to put my money to work in something I'm running and controlling than give it to somebody else, right? And that could be a money manager or the US government or whatever, but most entrepreneurs like that control feature. So it's just super powerful, the math of it. And people only have to see it like for 1 year, and they tend to become, in a good sense, addicted to. It's another form of saving.
Well, and if I think about it from the perspective of like marginal tax rate and potentially payroll tax, assuming it's still under the cap.
Yeah, a lot of the work we do is all driven by driving people who are starting in the highest tax bracket, 37% federal. Oh my God, if they live in California and New York, those numbers are 45 to 50%, getting them down to like 20% or something like that. So that's part of the math, is that whatever you're left over with, it's taxed at a much lower marginal rate, which is good.
Right. And so if we just take that math, going from 30% to 20%, if I'm doing my math right, that's like 17%.
Correct.
Return.
Right.
Well, if you can pick a stock or a fund that's delivering 17% return a year, you're a genius.
Well, and we do this math all the time. So I was on a call this morning I'm going to just try and remember the exact math, but I'll be close. So this is a gentleman that has a big IRA, and he would love to Roth his IRA, do a Roth IRA conversion. So just for the audience, what happened? Normally, if I take money out of my IRA, I pay income tax on it. That's kind of the way IRAs work. So you could pay 47% tax on that. If we can use a tax, and the benefit is once it's over in the Roth IRA, it's never going to pay taxes again. Now, a lot of people don't do that because they go, oh my God, if I pay 47% in taxes, I'll have to live to be 100 to make back the money. If we can save a lot of that tax by using tax strategy, it becomes much more appealing. So we did a presentation for a client this morning, which involved the solar strategy we talked about. So his return on his investment in solar in terms of the tax benefit was 51%. You're going to have a tough time finding investments that do better than that. So
yeah,
and that's kind of, we talk a lot about a lot of the strategies that we use. Solar would be an example, is what we call a tax equity strategy. So if you don't do a tax strategy, your CPA calls you up and says you have to write a check for $200,000 to the IRS. I'm just making that up. We might show the person, if instead of sending that $200,000 to the government, let's just say he sent 75,000 of that to the government, and he got to keep the rest of it in his wallet, in his portfolio, in his business, the ROI can be phenomenal.
Yes.
So we're passionate about any chance we have to educate people about how they can take advantage of that.
Yeah. So let's wrap up with one thing.
Sure.
It would seem like foolish to ignore AI. That's
100%.
and just I've seen something. Let me just throw this out. There's something called OpenClaw.
Yeah. Okay. So I think I know what we use a lot of these tools. I'm certainly familiar with Claude. I'm not sure I totally know OpenClaw, but
No, so not claw, like lobster claw.
yeah. Oh, okay.
So this thing is looking as revolutionary as ChatGPT was back in 22.
Okay.
And people were actually talking about spinning up instances and treating them like regular employees, where they give them instructions. And these guys, they work autonomously. You give it instructions like, hey, please look at my emails and my calendar for the last month.
Correct.
And tomorrow I want you to tell me how I can save 20 hours in the week. And I want you to do that work. And it will come back. You come in the morning and it has a message for you saying, okay, here's what to do. And by the way, I've already built this integration to do it for you. It's like the next level beyond what everybody's used to.
So we're looking at that world in a bunch of different ways. So right now we have a marketing department, and they send emails and they do posting on social media and all of that. That's human labor. Now, a significant part of our marketing department is in the Philippines. And they do a phenomenal job, but it's a whole lot cheaper than if we did it in America. So initially we got, hey, we're big enough. We have a bunch of people doing marketing type stuff. We need a CMO, a chief marketing officer, right? So we're looking at whether we could train the computer using AI to be the chief marketing officer, right? And come up with the ideas. And we use it all the time for, a client asks a problem. We do the research. I've done this many times. And I get all the data, and then I feed it in and say, can you turn this into a 3-slide PowerPoint presentation?
Mm-hmm.
And 60 seconds, they come back with a nice little presentation or an email or whatever. So that's using it, I guess, to not in a mean-spirited way, but just to replace slow and expensive, not a criticism, labor. So that's one area. Another area we're looking to use it in is, so imagine you have a sales and marketing campaign that starts with an email. And if a person reads the email and they like the email, they can request more information. They might fill out a little questionnaire. And in our system, traditionally, if they answer, it gets routed to a real human being who looks at that thing and tries to contact the person. So we're using AI to see if we can design at near the front end of that funnel, we call it, a bot, an agent, right? And that agent would say, Craig, I'm so happy you contacted us. And it'll do some of the work that would actually what would do two things. One, make sure it really is somebody that a human being should talk to. It's a high enough quality prospect, and might do some of the pre-discovery work so the human being doesn't have to do that. So that's kind of, in another way, using AI and agents and bots and things like that. Now, what we'd really like to do is when we do tax strategy, we have a very elaborate computer model that we get these data endpoints, we feed it into the model, and we always have to do some tweaking of the model, right? So we're working very hard to see if we can use AI to do a lot of that automatically. Like, hey, Mr. Jones, give me these 7 data points. We put those in and just boom, AI does a first pass. That would be very helpful to both us and the client. I was on a call right before I was talking with you. And what's your normal fee for doing tax strategy? And she says, which is totally legitimate, how do I know that you will come up with something that I would consider a good ROI, right? So she doesn't want to pay $15,000 to save $20,000 in taxes. That would not be good. But if she could save $200,000, she might think that's interesting. So we somewhat do that manually now. We have to write the client an email, put the stuff in. We think we can use AI to do that training. So that would be good for us because it might mean that we don't waste anybody's time that isn't really a good prospect for us.
Yeah.
If they are, it's good for the client because it gives them confidence to go forward, knowing that there's a high probability that they're going to get the result. So we're not by training or expertise yet AI, but we do think it's revolutionary, and we're trying to be all over it. As we have a rule in our company, for 2026, you have to prove that you tried to do something with AI at least for an hour every week. And that's awesome. every employee in the company, not just like people like me. But so we're trying to embrace it. And part of the trick is it just changes so fast.
It does. Yeah. And that's that open claw thing that I mentioned. That's kind of at next level. So, but yeah, and I think that's the key. I mean, my take is, I was talking with somebody about this earlier. I said, I think AI will eliminate job titles, but I don't think it will eliminate jobs.
100%.
And so the question is, what are we doing to make sure that we're improving productivity?
Yeah, and that's the challenge, right? So, if you used to cut hay with a scythe and somebody invents a tractor, if you don't learn how to get a tractor and how to operate a tractor, you're going to become obsolete. If you learn how to do that with a tractor, you might be able to cut 20 times as much, whatever it is, right? So,
and you also need somebody to maintain the tractor.
Yeah.
You need somebody maintaining the tractor. You just created a new job.
Right. Exactly. So I think I think you're right. For the people who learn how to do it and take advantage of it, I look at it more as a huge opportunity than, So we're trying to embrace that as much we can. Definitely.
Well, I love that. Peter, it is always a delight to speak with you. I walk away every conversation energized. And I just want to thank you for coming on Fiduciary Alchemy. How can people reach you?
So I would say, I'm come from a different generation. Literally, just call me on the phone. I mean, my phone number is 917-697-4156. Just email me, Peter@Wealthrive, and it'll come to me, and love to, always eager to have an introductory conversation with, anybody about the topics we've discussed today.
Excellent.
Love to do that.
Thanks again for coming on Fiduciary Alchemy.
My pleasure. You take care.
Thank you for tuning in to Fiduciary Alchemy, the coolest financial podcast you're likely to find. We go looking for voices like the one you just heard, because I want you to dodge the mistakes that I made and learn it without the coma, without the drama, without nearly paying the man. I don't know why I lived when so many others died. That part's still a mystery. Now some folks ask, Craig, what is it you do? Well, I'm telling you now, that's no mystery at all. We solve hard marketing problems in crowded markets, so good folks like our guests can rise above the noise, become visible, memorable, irresistible, and grow like never before. If organic growth is your problem, reach out, call me. Let's make a plan and bring your next steps into the light. But don't leave yet. Stick around a minute more and listen to Bluesman Grendel and the Compliance Choir deliver a word of caution. Just for you.
This podcast is for information, education, that is all. It is not financial, tax, or legal advice to guide your call. Nothing here's an offer. Nothing here's a buy or sell. No recommendation, no solicitation. I'm saying it plain and well.
Plain and well. Plain and well.
Past performance ain't no promise of what tomorrow brings. Markets turning, people lose on all kinds of hopeful things. Every investment carries risk. Principal can fade away. What works for one won't fit us all. That truth is here to stay.
Fade away.
Fade away.
Here to stay.
Yeah, that's the compliance blues. Lord, the compliance blues. Get your own financial, tax, and legal help before you make your move. That's the compliance blues. Oh, yeah. Your situation's yours alone. Your needs are not the same. Different facts and different goals can change the whole damn game. So talk to somebody qualified before you choose your road. Because the weight of every money move is your own load to hold. Your own road. Your own load. Your own load.
that is right for you.